Shaking my head, people. I'm already shaking my freaking head. A lot of stuff. I have three freaking pages of notes here. I don't know how much of this I'm going to get to, but we're gonna try to get this thing together here. So yes, status post this market closing today, March 27, 2023, post market report. Let's start off with this doom loop. Okay, this kind of caught my attention earlier. As a matter of fact, it's in the title of this video. Just real quick, I had an issue with this thing. Can you all hear me okay? I hope you can hear me all right because it wasn't working before. Anyway, let me know. Let's talk about this doom loop. This is very interesting information. I didn't know this, so I'm a little bit ashamed of myself here. But according to Capital Economics, this is what they want us to know here. 70% of commercial real estate loans are dominated by small and mid-tier level banks. So what they're saying here is kind of interesting, is if these smaller and mid-level banks in aggregate, I guess, start to fall under more pressure, we all know their books are frankly dog poop. I can't say SHIT anymore. Thanks, Mitch. I mean, they must have literally collectively trillions and trillions of dollars in liabilities. Anyway, going back to this whole thing, 70% of these smaller and medium-sized banks are holding a huge amount of commercial real estate now. According to Capital Economics, if these loans are called back, okay, this could cause a cascade event that could basically destroy the economy. Okay, I think they have a point here. It's kind of interesting. It goes back to what you and I have spoken about: assets on the books of these institutions here. Their liabilities, I would imagine, way outweigh whatever they have in the form of liquid assets. And that's how all these banks operate here. Look, this is no secret. The entire the entire financial system, I want you to think about what I'm about to tell you here. The entire financial system works in a constant state of a vacuum. It's depleted. It's not liquid, despite what we're hearing. It's an amazing thing, honestly. We're being told by Janet Yellen, we're being told by Jerome Powell, the system is sound, the system is liquid. Really? Then why this emergency policy? Why is it, in your opinion, that there hasn't been another emergency committee, like a congressional committee, to pull Yellen, to pull Powell, to say, hold on a minute, you two freaks out here are telling everyone the economy is liquid, where the banking system is fantastic, but you had to initiate emergency policies to fund the system, to pump hundreds of billions of dollars into it. How does that work? Obviously, there's a big problem here. And this doom loop, so interesting to me. I'm going to do a little more research into this myself, honestly. I had no idea, honestly, and I would never have even imagined this. Thank you, Henry. I had no idea, and I want to know from you, how many of you out here knew or had the idea that 70% of commercial real estate loans were held by these smaller institutions and not the big Wall Street institutions? It's kind of interesting. I wonder why they have kind of swayed away from that. Is because it's a ticking time bomb. I'll tell you something else that's interesting as well. So let's put this into perspective. You're going to love this. So this First Citizens Bank apparently just bought deposits and loans from this SVB bank here. Okay. Now they got these things at a 16.5% discount. So let's put this into dollar terms. So they bought apparently $72 billion of assets, deposits, and loans here. Okay. I wonder how much of this is commercial real estate. Okay, well, let's just put that aside. They bought $72 billion in loans and deposits at a discount of 16.5%, which means they instantly have a profit of 11.88 billion. That's like, for example, let's say some guy walks over to you on the street with a $100 bill and says, "I'm going to give you this $100 bill, if but you only have to pay me like $18 for." You instantly have this nice profit here, or whatever, $16 in profit. I would do this all day long if someone was willing to make a deal with me like that. It's an incredible thing. It really, really is. We also got another interesting warning. And listen to this, okay? Listen to this, everyone. Okay, let's all laugh. Okay, we'll put on like laughing hats or something. There's such a thing as a laughing hat, because I want one. I want a laughing hat. Anyway, so the IMF is warning that risk to the financial system is increasing. Can I get a duh? Yeah, look, here's the situation. You know this, I know this. We spoke about this right off the freaking bat here. It doesn't matter what they pump into the system. It's a zombie system. It's a dead system. They can pump and pump and pump and pump, but is it going to last? Is this even a Band-Aid? What is this here? I mean, honestly, let's put this into a, I'm kind of a macro guy. All right, so let's look. We have a systemic problem. This entire situation is so off the Richter scale. Trillions upon trillions upon trillions upon tens of trillions of dollars. It's a vacuum, okay? And it's sucking up hundreds of billions that are being pumped into it, and it's not even making a dent. All it did do today, if you notice, on the back of the news here, that the Fed's going to keep pumping hundreds of billions into the system. Other central banks are going to follow suit. There's going to be more. Well, the regional banks, the big banks, all got bid higher today. Although this market didn't do anything. The NASDAQ finished in the negative. The S&P 500 finished with a nothing, basically flat, a slight gain. The Dow did put on a gain because the big banks were getting bid higher here. Crude oil put on a 5% today. Okay, that's pretty profound. Bitcoin, cryptos fell under pressure except XRP. I think it got bid higher by 6% at the end of the day here. Gold and silver fell under some pressure here. There's an issue in the debt market. Imagine, we got bond yields rising, 10-year yield rising here, some weakness in the relative strength of the dollar. That's the situation here. Let me go through these notes like I was telling you. And I want to show you a chart in just a moment that I think you're going to really enjoy too. So we got this IMF warning. We got this doom loop, which sounds legitimate to me. I mean, honestly, if these smaller institutions have to call their loans, any loan you have can be called. I don't know if you actually know that. If you look at the fine print, when you take out a loan for whatever it might be, no one reads the fine print. Nobody reads the fine print. It's just sign, kind of like a drone. But the fact of the matter is, if you have a loan out with an institution here, they can call that loan and or confiscate whatever it is that you took the loan out on. So I want you to think about these things, okay? Next time you sign some kind of a contract for a car loan, a house loan, or a personal loan, realize what can happen here. They can call that loan, okay? And if you can't pay the loan at that time, they're just going to come after all your assets here. You understand? Put liens against your properties and your salary and everything else. See, nobody reads the freaking fine print. Maybe you should start reading it. Maybe we should all start reading it. Anyway, so we got not only did we get this is just beautiful. Not only get a warning from the IMF about financial instability is increasing. So we get virtually the same warning from the FDIC. So the IMF and the FDIC are both saying the financial system, we got problems here. Okay, despite the fact that these freaking institutions here are propping up a zombie system. Imagine really a dead system, a system that is nothing but a vacuum. Okay, it's operating in a perpetual deficit. It's completely insolvent, and they're going to freaking prop up and prop up and prop up. Yes, they can call the loan, Mitch. It's kind of crazy. Yeah, read the fine print. You take out a loan with any institution, they can say, guess what? We want our money now. And they're going to come after your assets. It's insane. It really is. Yeah, the Gould will do it. Powell will do it. And you go to these banks, you go to these institutions, and they sit there with their smiling face. Yes, sir or ma'am. Oh, we're more than happy to lend you whatever you want to. But realize in the fine print here, oh, you're completely screwed. If we want to screw you, we will. See, look, what does it come down to? These institutions, they're going to go on. One way or the other, will they sell assets at fire sale, prices get bailed out by governments and whatever it might be, central banks. They're going to go on and they're going to suck you dry. That's what they're going to do, period. So anyway, this is kind of interesting, like I said. So 2 warnings, IMF, FDIC, same thing. The financial system has significant downside risks. Can I please get another duh? Let me see. What else do I got here for you? People. What else here? All right, that's not important. I'm trying to just skip through things here. I don't want to cover all this because you know what happens to Greg Mannarino. If Greg's videos get too long, Greg gets complaints. I want to show you something here. How many of you recall from I don't know how many freaking years ago when I started addressing the issue of money velocity? What is money velocity, Greg? Money velocity is the rate at which cash moves through an economy. Okay. You cannot have, this should make sense to you, all right? I hope this does. You can't have an economic boom, a thriving economy without cash moving through the economy. When an economy is dying, you would expect the money velocity to drop. When an economy is actually doing well and booming and people are out there spending and money's moving around, cash is moving around, the money velocity would move up. This is a chart going back to 1960. 1960 of the money velocity. We peaked. We peaked in 1997. This is where we've been since 1997 with regard to the money velocity. Oh yeah, we were doing great over the last administration, the one before that. No, we've been in a downward spiral here. The rate at which cash has been moving through the economy continues to drop. We're at historic lows here, okay, under the president mummy himself over here. So let me ask you, where did the last freaking 28 years go? All right. It's all been propped up and more propped up and nonsense and garbage and crap. That's the truth. Want to look at that again? What do you think? Lovely, isn't it? Yeah, just freaking lovely. Anyway, people, so that's where we're at. I do want to hear from you. What do you think about this? Were any of you aware, because I wasn't, and I'm going to admit it right here, that 70% of outstanding commercial real estate loans were being held by these smaller and mid-level institutions? I got to think about why. Let's ponder why that is. Did the big banks know something that the smaller banks didn't? That eventually the commercial real estate market was going to implode? Look, obviously, all of this here is I don't know. It's so sick and twisted and everything else. Lava girl. Don't you dare talk bad about my lava girl, because I'll come there and I'll smack you around. Anyway, what do you want? What else do you want to talk about, people? Chet L. This is a con. I've used this multiple times. It is a con on an unprecedented scale. I mean, seriously, can someone here who's smarter than me, and I know that probably every single one of you here is smarter than me, can you make me understand this? Because I don't get it no matter how many times I keep thinking about it. How is it, honestly, and where's the accountability? The banking system is strong. The economy, we're booming. We're doing great. The banks, they're absolutely liquid. Meanwhile, they're initiating some kind of emergency funding to prop this whole thing up. How does it work? I don't know. I want one of you out here to tell me how it works, because I don't get it. Melanie, thank you. Because they're liars and they're evil. Yes. But it's crazy and it's propaganda. Ken, you're absolutely right. But honestly, why is it that the mainstream media doesn't hold anyone or anything to account? It's always look here, don't look here, some other nonsensical thing to keep people, not understanding what's going on at all. And that's why, I mean, look, when these things melt down, and they all eventually do, people walk around the streets kind of like shocked and stunned. Oh, no one saw this coming. Really, honestly, how about the banking crisis here? No one saw that coming? How about you and I did from at least 8 freaking months ago? We covered it. And all of a sudden, oh, it's here. Look, and I'm really, look, here's the big question. Here's the big question, and I want to hear from all of you on this one here. Do you believe that what we're seeing now, the hundreds of billions of dollars, is going up much, much more? We're going to keep our eyes on the Federal Reserve's balance sheet, which is completely fake anyway. But what they're allowing us to see, again, just in 2.5 weeks, over $400 billion got pumped into the banking system here. Who knows what loans have been issued? Here's the other thing too. Do you realize that this has been held from the public? There have been multiple institutions, banks, mostly small level banks, I would imagine, but we're not allowed to know, who have gotten loans from the Federal Reserve. Do you think it's fair that in what's supposed to be an open society, a transparent thing, that we are not allowed to know which institutions got these loans? I don't think that's right. I think as a person that is keeping, let's say, for example, you're keeping your cash or you have assets in bank XYZ, if you found out that that bank got a loan from the Fed because they're in trouble, would you want to keep your assets there? I don't think you would. So I think it's extremely unfair that we, the people, it's supposed to be a government of the people, by the people, for the people, are not allowed to know which banks got the loans. Now, we did see this. If you recall, when they announced that banks were getting loans, we watched several banks. I forgot which ones they were. I talked about it at the time. All of a sudden, their stocks started getting bid up. So someone knew, or these institutions knew which banks were getting these loans. But you and I, we're not privy to that information. We can't know, even if you have cash or assets in these institutions. Who came up with that? Who came up with that? Exactly. You will eat bugs and you'll like it too. Crunchy. Okay. What else is there to talk about here, people? I don't know. It's just it's a nightmare, but we can laugh about it. And I better stop, because I'm in this thing now for 17 minutes and 17 seconds here, and people are going to bitch at me. All right, people, look, I am kind of out of here. Love all you from the heart. I mean that. Please share the video. Please comment. Let me know what you think about the things we covered here. What else can I tell you? I'll see all of you in the morning as usual, and we'll just go over this again, and we'll see what else. Look, let me tell you something. There's going to be another shoe to drop, and maybe it's this commercial real estate issue, this doom loop. Perhaps it is. I mean, look, what they do is they sometimes float out little bits of truth. You understand? If you know how to sift through it, sometimes you can get a glimpse of it. Okay. For example, with the bank failures, you and I nailed this to the wall. I want to know who else nailed this to the wall. I don't know how many other people from 8 months ago, you and I, we had it covered right here on this blog. We knew there was a problem. We talked about how there was a problem here 8 months ago. I probably outlined this in the Trends Journal as well. I do write for the Trends Journal, absolutely free. I don't charge a dime for Gerald. I love Gerald. He's one of my dearest friends. We talk all the time. And we're on the same page with all this here, people. But these little bits of truth, once in a while, they get floated out. So this doom loop thing, I don't think we could ignore this. If there really is, and I believe this is true, a systemic problem, another one here regarding commercial real estate, and these smaller institutions have their books loaded with it, well, absolutely, that could be the black swan that brings this whole freaking thing down. Anyway, I guess we'll see, people. We'll see where this whole thing. Where is Oink Man? It's interesting. We haven't heard from Oink Man in a very, very long time. Anyway, all right, people, that is it. I think we're going to go. Like I said, we'll reconvene tomorrow morning. Love all of you from the heart, and we'll talk then. See ya.